Hello guys, welcome to the Solid as a Stock session for today, April Fool's Day, April the 1st, and it's a Friday. Now as much as it's April Fool's Day, I promise we will go through real examples of trades today. Now let me just put the disclaimers up there on the top left hand side. So there they are for you to read as I explain what we will go through. If you need to pause the video to read them, by all means do that. Okay, so our stock sessions will go through trades that we placed before to see what's happened to them. Did we win? Did we lose? How might we have interfered or changed anything with our trades? Would we have cancelled them? Things like that. We have a very long list of trades that we've placed in the last few months, some of which are still open months later. So what I'll do is I will only cover ones where something's actually changed. Otherwise, assume that any of the trades that you might have seen before that we haven't yet concluded or shown on these videos is still open, going in the direction that we want it to, and we've yet to hit our profit target or close out of the trade. So I'll show you some trades that have actually had changes and what we'll do about them. Now, then what we'll do is we'll look at the state of the current state of the market, and then we will look at some new opportunities. So just before we do that, just to show you guys where you can go for different resources, support, and help. Now, for those of you that are watching live, if you want to type questions and things in the chat box as you're here with me, brilliant. By all means, please do that. I'm quite happy to divert off topic to make sure that your questions are answered, because that's what these sessions are for. They're here to help you. So if you're with me live, by all means, write questions, comment, tell me what you want to look at, whatever it is, and I will be guided by you. For those that are watching the recording, you have different places that you can go for help. So you can email me, becky@tradewithufos.com. You also have support@tradewithufos.com, which again is another email address you can use to go for support and help. You then have this link here. Let me put it up. tradewithufos.com/Becky. So that will take you to this link. From this link, you can get different apps and platforms from the top there. You can book one-on-one coaching if you'd like to. And if you scroll down, you can log in for free and ask questions in this area. Now, the benefit of doing that is that other people can see the questions and they can see the answers. So you'll notice that there's a bunch of questions already here. You might find the answer to your question here already. Or you might be doing somebody else the favor to log in for free and post your question. Okay, so those are different places you can go for help and support. So let's just have a look then at trades that we've taken recently and what's happened to them, how we might have changed things, or how we might have managed our trades. That's a better phrase. Okay, so we have VST here, Vistra Corp. This was placed on the 25th of March, which was here. And as we can see, price moved away on that day and it never came back down. We never triggered. We're still waiting to be entered into the trade. Because of that, it's now moved away from everything lining up for us to take the trade in the first place. If price were to fall now and come back to this area, likelihood is our probabilities will no longer be on our side. So we will be cancelling this trade. So we'll cancel this trade, both sides of it. We've got two targets, so we'll cancel both of them and we will remove this. No longer a need to place this trade, which is Vistra. Similar thing happened with TWNK, which is the ticker symbol, Hostess brand, same thing. We placed this on the 25th of March, which was here. Price moved away, never came back. It is now no longer likely to line up, even if price were to retrace. So we cancel our order, we get out of that particular trade. So we cancel that one as well. Now there's a few that are open. Let me just come back up here. We now have one AJRD, Aerojet. This one we will now have closed out for a small profit. So again, let me explain why we closed them out. Let's put that on a 3-day chart, we can see it better. Let me explain why we've closed it out. So again, for those of you that have been with me in sessions before and seen this trade be placed, you understand the context of this trade and what happened. For those of you where this might be the first session you've ever watched, it's to give you an idea of why we might cancel a trade. So you can see it in a real life example and understand more about trade management concepts. So We got into this trade back on the 21st of January 2022. I think we triggered in the trade then. So we got in there. The black line was the entry, the red line was the stop. We have a green line here, which is our first target, and a green line here, which was our second target. Now, as we can see, we triggered in, we gapped down, lovely, and we actually would have taken our first target at a slightly greater profit than we were anticipating. That's great when that happens. Brilliant. We would have made slightly more than 1-to-1 there. And then price kind of bounced around. Didn't really do much. Just kind of sat here. Since then, the conditions have changed. We no longer have probability of a move to the downside. That's not to say it won't move down. It's just to say we no longer have statistical probability that it will. Why do we know that, or how do we know that? From our auto climate having changed. For those that follow this strategy and know what auto climate is, you'll understand why. Bear with me as I explain why to those that might not understand. So auto climate is an app here that we use to help us figure out where the probabilities lie. If it's a thick red dot, like any one of those, tells us probability is down. If it were a thick blue dot, tells us probability up. If it's a thin dot, it tells us that there's not enough probability either way. So on the 28th of March, at the start of this week, that dot changed from a thick red to a thin blue. What that means is we no longer have probability down. So what that means is that on the 28th of March, so at the start of this candle, and let's see what that would have looked like. So on the 28th of March, at any point during that day, you would have gotten out of the trade. You could have been lucky and got out at the low of the day, made a bit more profit. You could have been unlucky and got out at the high of the day, made a little bit less profit, or you probably got out somewhere in between. Either way, what we've done is ended up taking profit at this point for our first target, and then roughly, let's say somewhere in the middle there, $39 roughly here, taken a profit there as well. So overall, we made on this trade just over 1-to-1. So can't knock a profit. Of course, we would have liked to take it to our second target, but there's no need to hold on if we no longer have probabilities. So there we go. I believe, just checking my notes here, I believe that's all we had in terms of changes. So a couple of cancelled trades and one slightly, well, let me see here. Do that one. So I'm just checking. I want to make sure that I'm looking at all the same ones here. Oh no, there's one trade that's also a loss. So let's have a look at this. Oh no. Okay. So this one, so far then, we've had 2 cancelled trades, 1 trade closed early for a small profit. This trade will be closed for a very, very, very small loss, providing that you were looking at it at the time. So with this trade, we went in this day, which was last week, and we went in because we had a thick blue dot, probability upwards. Now on the 28th of March, so again, let's do this. So the start of this week on Monday, that candle changed from thick blue to thin red, again showing us that we did not have probabilities to the upside anymore. If we'd have acted on that, then we would have closed our trade at that point. So could have been the high of the day and we lost tiny, could have been the low of the day and we lost a little bit more, could have been somewhere in between, and again we lost a little bit. So if this is 100% of our risk, then I would say maximum you lost 20% of that. It may be 10% of it, maybe 5% of it, maybe 20% of it. Either way, we lost less than we were willing to lose, which is great. And the reason we do this, just to show you in this real life example, price has continued to move down. If we hadn't have acted and closed this trade out on Monday, then we would see this candle move against us and be losing and losing more. Now you could say, well, if it hits my stop loss and I lose the full amount that I was willing to lose, I was willing to lose it. That's why I got into the trade in the first place. I was willing to lose whatever it was between those two numbers. But again, if we manage our trades a little bit tighter and we say all the while probability is in our favor, then we're willing to risk that. But if probability is not in our favor, why would we be risking anything? And then that way we can close our trades here rather than here or here. and save ourselves a bunch of loss. So that way, with the trades that we've had so far, we've taken just over a 1-to-1 loss, and then we've taken a 0.2 loss. Sorry, just over a 1-to-1 profit and a 0.2-ish loss. So overall profitable from these two trades that have been managed, plus 2 cancelled trades. Okay, so this is what we have gone through. These are the trades that we've placed before. So again, we would have cancelled this on Monday. Let's close that and we'll delete it off of the chart because we don't need it anymore. So what we're going to do before we look for new opportunities is I'm just going to look at the FX Street economic calendar. Why? Because the economic calendar tells us scheduled news reports. Again, why do I care? I care not because I want to follow the news. If trading was as simple as following the news and doing what the news says, then everybody would be successful traders because we all have access to the news. It's free at our fingertips for most of us. What I want to know, let's just make this Eastern time as well if I can. She says, okay, I can't see it on that list and my mouse isn't working to do that. So this is in GMT, which is an hour earlier than British summertime right now. So what that means is essentially this is 4 hours ahead of Eastern Standard Time. So I'll give you the Eastern Standard Time when we see it. So we want to know the scheduled news reports, not because we want to know what they say and make buy or sell decisions off the back of it, but because we want to know where we might see volatility in the markets. Why do we care about that? Because volatility increases our risk. As traders, we can choose to embrace that risk or we can choose to avoid it or something in between, but we still want to know. So I'm looking at high impact news across the next week on US markets. Why US markets? Because, of course, we will be trading US stocks. So today, we've already had news that's come out that could have affected the markets. So it's already done. We don't need to worry about it. Next week, we will have news coming out at 10 a.m. Eastern. So again, this is different times, but 10 a.m. Eastern on Tuesday that could affect US markets, and at 2 p.m. Eastern on Wednesday. So be aware if you're placing stock trades in the next few days, sort of today or Monday, to just be aware that on Tuesday and Wednesday we have some news coming out that could affect those markets, and therefore you are going to react according to your risk tolerance. Okay, so just realized, I'm going to have to get it up now. I did not load top before this, which is not very helpful. So let me just load this so that we can, of course, see our platform and see what we're looking at here and look at our new trades. So whilst that's loading, let me come back to here and just explain for those that might be using different platforms, why we use different platforms and what they're good for. Now, everything we do is using apps that is Auto Climate and Auto UFOs. Those are the main apps that we use. Now, they are available on TradeStation, MetaTrader, which a lot of people use for Forex, TradingView, and Top, which is our own proprietary platform. So 4 different platforms that you can use these apps on. Now, if you put out, you don't necessarily need to use any of those platforms and use the apps yourself, right? You could just go and place them. I wouldn't recommend that because I would always recommend that you do your own analysis that fits your own trade plan. The videos that we do here give you a guide as to how you can use these apps and show you real life trades that fit our methodology, that fit the rules that we trade to. But it is ultimately up to you what rules you use and what trades you place. So TradingView, I like to use for the maths side, the calculations. I think, in my opinion, from what I've seen, the calculations are easier done on TradingView. Does a lot of the maths for me in a very easy way, so I prefer to use it. For analysis purposes, I use Top. Now, I use Top because it is integrated with all of our apps, and it's actually really easy to use. You can see things very easily. So I'll use Top for analysis so that we can find our opportunities and the different examples that we'll look at. But equally, I will then go and place that trade on TradingView so that we can use it for maths purposes. Okay, so as I've been talking, I've been loading the ES, which is the futures contract that represents the, so it's the continuous futures contract that represents the S&P 500, which is the top 500 US stocks. Now, at this point in time on a weekly chart, we see that the US market as a whole has a thin dot. That thin dot tells us, oh, my second screen just went funny there. Give me a second. I'm having technology issues today, she says. Oh no. Bear with me, of course, if you're watching the recording, perhaps skip ahead until you can see the screen come back again. So because my second screen is gone, it means I can't see any questions or I can't see the stream, and therefore I don't know what's going on. So I need to see it. So I'm just trying to bring that up here. Okay. Bear with me. Apologies for those that are watching live. Like I said, those that are watching the recording, you have the benefit of being able to skip past this to the next time you see me not looking over here. Okay, I think I'm going to have to unplug it and plug it back in. It tends to work, doesn't it? She says. Okay, brilliant. We've got it back up again. Don't want to jinx it, but there it is. Okay, brilliant. So let me just make sure that I can see everything again. Apologies for this. There we go. Okay, brilliant. Everything's back up and running. I'm checking the chat box. Can't see anybody saying anything so far. So apologies to those watching live. But as I say, those watching the recording, of course, you could have skipped through that. Okay, coming back to top then. Let's have a look. So thin dot tells us not enough probability either way on a weekly chart of the S&P 500. Why is that important? It's not that important to our individual stock choices, but if the market as a whole has probability down, then perhaps the individual stocks within it also has probability down. So it just gives us an idea as to which direction we look to go in, long or short. If it has probability up, then probably the individual stocks within that basket also have probability up, and therefore it gives us correlation on our side. Correlation is one factor, not the only factor as to why markets move up or down. So we need to be able to look at the overall market to guide us as to where it makes most sense to look up or down. At the moment, it's a thin dot telling us not enough probability in either direction, which means we can choose which way do we want to look, up or down. Now, personally, because we have just hit sellers on the overall market and prices started to move down as a result, I'd like to look at the short side. So let's bring up our matrix and let's plug in our filters to look to the short side. Now, we're using a weekly chart on the left-hand side, meaning we are looking at position trading. Position trading means kind of long-term swing trading. Will be in trades for a matter of minimum days to weeks, maybe months that will be in trades. Like I said at the start, we are in a few trades at the moment that we've been in for months. So we're using the weekly chart because it makes more sense to being stock trades for the longer term or in and out within a day. If we're using timeframes that are kind of in between that and we're getting into stock trades that last a few hours, maybe to a few days, if it's over the course of a day or two or three, then we put ourselves at risk of the gap that we see every day in stocks that we don't want to be doing. We can take gap risk if our trades are longer term because we tend to have a wider wiggle room between our entry and our stop. So let's have a look at trades that have a weekly confirmed down climate, so probability downwards, that are sensible to trade, meaning towards the start of those moves and close to our ideal trading price. We're also going to exclude stocks that have earnings in the next 5 days because we don't want those earnings to impact our trades at the start of our trade. So filtering with that, we've got a list of 20 odd, maybe. I'm not very good at counting with my eyes very quickly. So what we'll do, let's go alphabetically Z to A rather than A to Z. And we will click each of these and go through one by one, finding opportunities as we go. Now, something to bear in mind is that when we are placing these trades, and it will become sort of evident as we go through this, when we're placing these trades, we're going to be looking at a variety of different timeframes on the right-hand side. That's because the right-hand side is there to help us be more accurate, more specific about exactly where we're buying and selling. The left-hand side, which is the weekly chart, is helping us decide whether or not to buy or sell. So in this case, Viavi or Viava, I don't know how to pronounce that, we have a thick red dot, probability to the downside. So therefore we should be selling. It doesn't mean we just click sell in the middle of nowhere, where we don't necessarily have probabilities, we can't manage our risk, and we don't know where to take profits. So it answers the first question, which is, do we buy, sell, or do nothing? The question here is answered with we should be selling. We then need to answer the question of where, and that is where the right-hand side comes in. So we use the right-hand side chart to help us be more specific. As long as the right-hand side chart is smaller than the left-hand side, it doesn't matter really which time frame it is. I would say it shouldn't be too far away. We don't want to have a weekly chart on the left and a 10-minute chart on the right. Too far away, less relevant to each other. So I'm going to be looking at the 144-minute, which is a Fibonacci time frame, the daily chart, the 2-day, and the 3-day chart. Again, you could change it. You could look at 4 hours or 2 hours, or within that range, you could be looking at different time frames. I just don't want to be looking through 1,000 different time frames before we find a trade, so I look through 4, and that's what we'll do. Okay, so the first couple of trades, I will explain exactly what we're doing and why. And then from there, once we've got that foundation, I will then speed through and look through opportunities quickly so we can get some on our books. Okay, so initially we do have a trade on this one, but I'm going to quickly look at different timeframes to see what might work better. So I believe the 1 day was better there, 2 days, nothing there, 3 days. 3 days better. Okay. So the 3-day chart is actually showing me the same UFO as we have on the weekly. So we'll take this one. Now, why did I just look through different time frames and give you the 3-day instead of the 1 day? And I'll tell you why. So first of all, we have probability down, thick red dot, probability down. We have UFOs, red UFOs on the right-hand side. They show us where sellers are. If we're selling, we want to sell where lots of sellers are because it gives us more probability that price goes down from there. So we found that. Now there's a third element that we layer in here, which is our EMA number from the bigger time frame. Why? People buy and sell at the EMA number. EMA stands for exponential moving average. If price is below that number and then moves up to that number, people sell. If price is above that number and then moves down to that number, people buy. So we essentially want to be selling at the EMA price in a bunch of sell orders in the context of a selling environment. Selling, selling, and selling gives us more probability that selling happens and price goes down. So at the moment, our EMA number, which is 16.23, is nicely inside our UFO, which is 15.97 to 16.7. So overall, we're going to use that UFO because it gives us this space to capture the EMA number and these sell orders and hopefully catch this move to the downside. Now I'm just squishing here just to show you we also have lots of room to take this to the downside because the closest set of buyers on this stock are all the way down here at 8.08 to 7.56. So good trade ticks the boxes. Why the 3-day chart instead of the 1-day chart? We have numbers up here. These numbers show us essentially the probability rating of UFOs on that time frame. So this time frame has probability of 67.33% of working out. On the 1-day chart, where we had a UFO in a similar place, it has a 58.04% chance. So the 3-day chart just shows us a greater probability. So why would we not do that? So this is going to be our trade. Let me just put this in. This is going to be our trade. So today is the 1st of April. Just writing this on a log. Keep a log just to see what we're doing. See what trades we're placing and why. Again, you would be keeping your log as well because we want to make sure that we're logging everything that we do. I know our platforms and brokers keep a log of the trades that we get into, but we also want to keep a log because it helps us keep track of, for example, which time frames end up working better for us, which time of the day ends up working best for us, how many times do we hit our target 2 versus our target 1. Those are not things that your broker or your platform can tell you in the data that they collect. You have to collect it. So we'll figure out our target 1 in a bit. Our target 2 will be 808. Our entry is 15.97. Our stop loss will be 16.8 because I'm taking this number here, which is 16.7, and I'm adding 10 cents just to give it a bit of wiggle room. So our stop will go 10 cents above there, around about here. Okay. Our second target is all the way down here, and our first target will be 1 to 108, which we will check in a second. So let's come back to here and place this trade. So VF. Now I'm using the Fibonacci tools to draw, so sorry for those of you that use them, of course, for what they are intended to do. I use them as a drawing tool simply so that I can really easily keep track of what's going on and my trades, as I can see them visually on the chart. So we've got our entry and stop just drawn on the chart. Our target 2 will place on the chart, which is ages away. To be very honest, it's unlikely that price gets all the way down there. More likely something changes in between and pushes price back up again, I would think. So we'll place our second target down here and we'll do what we've done in the previous example that we showed right at the start, which is we'll manage that trade. If things change, we'll interfere and we'll get out of that trade to protect ourselves if our probabilities change. Let's now figure out where our first target will be. So the entry is 15.97. The stop loss is 16.8. So that's 83 ticks, it says here, but essentially 83 cents from one to the next, which means our first target is also going to be 83 cents away. It's a 1-to-1 trade. So it's 15.14 is going to be our first target. Now, we want to make sure that we are risking half of our full risk on each side of the trade. So 2 targets means we place 2 separate trades in most platforms. Now doing that, I'm putting $50 on each, so it becomes $100 risk overall per trade. Of course, that number is going to be different for every single one of us. Some people will be risking $1 on each side. Some people will be risking $1,000 on each side, whatever. Anything in between, anything more, anything less. It's up to us as individuals to choose what our risk is. I just do this as an example. So we'll place that trade and then we will place the second half. So again, notice as I'm using Trading View that the maths is easy. I put in my price that I want to sell at. I've clicked sell, put in the price I want to sell at, put my stop loss price in, which is 16.80. It worked that out for me. All I had to do was click take profit and copy it over. It did the maths for me, told me where that target should go. Now in this case, for our second target, we actually want to put the price in because we know exactly what that price is. So all I do is put that in. Again, keep the risk the same, and I'll place that trade as well. Now I'm going to put a little note on here. So placed 1st April 2022, 1 week, 3 days. It just helps me again to visually see. If you don't put drawing tools or don't put text on your chart, you don't have to. It's just that it can be hard to then figure out exactly what happened to your trade because you've got to go and look at the exact numbers and figure it out yourself rather than see the lines and very easily see what happened to it. So that's our first trade of today. Let's now go back to top. We'll do another example that might be slower and then we'll go quicker through this. So TTM. Okay, so before we even start, we're not going to place a trade on this one at all. regardless of whatever we see on the timeframes on the right-hand side. And the reason for it is because we have buyers overlapping our sellers. We've got buyers and sellers pushing against each other. We don't want to get involved in that. If buyers and sellers are fighting and we pick a side, it's more of a gamble to see whether or not it's going to play out. So we won't even look at that. No point trading if we have, or no point selling if we see buyers are in the way. No point buying if we see that sellers are in the way. Okay, so this one here, let's have a look. So we have a thick red dot, of course, probability down. Our EMA number is at 24.03, which is here. Currently on this time frame, we don't have any sell orders there. So I'm just going to look through the other 3 time frames that we look at, see if we find sell orders around that point. If we do, we'll figure out our trade. If we don't, we'll move on to another opportunity. There we go. I've looked at each of those time frames. There are no UFOs where we want them to be, so no point trading. Okay. All right, we have an opportunity now where we could go in at market, but we're going to check our different time frames here. So thick red dot, probability down, EMA number of 46.49, which is here, nicely within this red UFO. Check, check, check. We also don't have buyers for a long time. We've got buyers all the way down here at 31.92. So again, check, 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 everything kind of going in our favor for a short trade here. Now, on the 144 minute, we have 58.33%. So let's have a look at different time frames, see if we have a UFO, which we don't on this one. We don't on this one, not in the area that we want it to be, and we don't on this one. So we come back to the 144. Now you may be thinking, but that number was higher on other time frames. It was, but we didn't have a UFO where we needed to be. The most important thing is that we have a UFO where we need it to be, and then if multiple time frames have that UFO in the same place, then we pick the one that's got the greatest probability. But there's no point choosing the time frame that has the greatest probability if it doesn't have a trading opportunity. So we're using this time frame here, which is the 144 minute, and we will place this trade. So this is SRC, Spirit Realty Capital Incorporated, I think. 1 week and 144 minute. We are going short. The entry will be current price. Why? Because the UFO starts here, which is cheaper than where it is right now, where price is right now. Why would we sell something for cheaper than we could sell it for? So we'll sell it at market. So that's going to be different because that's obviously going to move, but roughly 46.32. But by the time we get to it, it will have changed and we'll react to that. Our stop loss will be 47.14, taking this higher number where those sellers stop and adding 10 cents to give us a little bit of wiggle room. Our first target we don't know yet. We're going to work that out on TradingView. And our final target is 31.92. So let's go to TradingView and place this trade. SRC. Brilliant. Okay. So again, I'm just going to squish this down so we'll be able to see where our second target will be as well. Okay. So we are going in at market, so whatever it is now, which is 46.29 is the current market price. Our stop loss is 47.14. Therefore, so let's try and do this quickly, and I'm doing it quickly because price is going to move, which changes our maths. So 89, which is 45.36. So let me just, the current price has just moved, has it? 93 it says there. 93. Oh, that's why. Sorry. So 89 to 89. There we go. So that then means our first target will be at 45.36. Let me make a note of that myself. 45.36. And again, I did that quickly because we wanted to make sure that we weren't missing out on, price moving to a different number and screwing with our maths there. So same thing, we're going to go in at market, which is now a few dollars or a few cents less than it was before. We've got our stop loss at 47.14 and our profit target will be 31.92. And again, we want to make sure we've got the same risk that we had on the first half of the trade. Okay, so we have placed the trade and entered into it, and we can see here that our trades are a long way off, as in our targets are a long way off, but we'll obviously see what happens the next time we get together and see whether or not we win this trade, we close this trade, we lose it, whatever we do. Again, let me put a little note so we can keep track. So placed 1st of April 2022, 1 week and a 144 minute. Okay, great. So we've now placed two different trades. I am now going to, I've explained both of them in a bit more depth. So what we'll do now is we'll just smash through and we'll find opportunities, and I will just quickly look rather than explain each step. So 24.4, we've got nothing there, nothing there, nothing there, and nothing there. Again, no UFOs that line up with the EMA price. This one is within buyers as we speak, so nope, we're not going to be selling if we are within a bunch of big buy orders. There's no need to do that. It's just going to end up hurting us. So here we have an EMA number of 32.54. So we will look to see if we find UFOs around there. Nope, no UFOs there. So sometimes it can be, I don't think it's ever happened on our sessions, but you can look through an entire list of 20, 30 odd stocks and find that you just don't have opportunity. You don't have any trades that line up, in which case, don't trade. There's no need to place trades for the sake of doing it. We want to place trades only ever because we have probability on our side or in our favor. If we don't have probability on our side, then we're simply placing trades for the sake of it. And doing that is never a good idea because you're more likely to lose the trade. So I know we feel like we want to place the trade. I feel like this is still loading data. Yeah, it is. There we go. Nothing there either. So it feels like we want to place trades because we're using time to look through trades. And so we therefore feel like we should be placing them. But as I say, there's no point placing trades for the sake of it if they're more likely to lose. Actually means you end up losing money for your time instead of making money for your time. So it's actually better, even if you go through a whole list and it takes an hour of your life, but you don't have enough probability, better to just walk away, do something else with your time, do something else that's more productive than place trades. On the flip side, you might find that it lines up and there's loads and loads of trades that you could be placing. And that's obviously, I don't want to place that one. Buyers too close. That's obviously not. It is a good thing to have lots of probability, lots of different trades that we could place, of course. However, if you have loads of different trades that you can place, and you've got, let's say there are 20 trades that you could place, and each of them are going to tie up $1,000 of capital. Well, then you need $20,000 in your account in order to place all of those trades. So you then just have to pick the ones that perhaps have the greatest probability, or you might have other filters that say, I can only place 5 trades at one time, or 2 trades at one time, or 10 trades at one time, or trades that take up X amount of margin. So you have to pick the best from what you have a system that helps you pick the best. We want to be consistent. If you're randomly picking them because you like the name, that's not a consistent way of approaching the markets. Better that you say the ones that have the highest probability rate, or perhaps the ones that are cheaper under a certain price or over a certain price, whatever it is, an objective figure that allows you to place trades that are more likely to work for you. Okay, so we have an opportunity on this one. Yeah, again, decent opportunity on this one. This is on the 144. Just going to see if we have better opportunities on other time frames. Look, 3.75. Nope. Okay. So come back to the 144. Let me squidge this out so we can see. So we have big red dot, probability down, EMA number at 23.74, which is just inside here. So we have sellers that coincide with the EMA in the context of a selling environment with a long way to go before we hit buyers that could stop us. Brilliant. So let's have a look at this trade. Let's put this in my little log. Okay, so this is ELY, 1 week and 144 minute. So it's going short at 23.69 to 23.98. Don't know our target one yet. We'll figure that out on TradingView. Our target two is 13.76, which is the top of this UFO, essentially where the buyers start to come in that could push price back against us. Again, the further away this target, the more likely it is that something changes in between and price doesn't get all the way there. If it does get all the way there, brilliant, we're not going to have a problem with that. But of course, we want to make sure that we have a plan in place for if price doesn't get all the way there, which is more likely. So again, that's why we have trade management techniques to help us out with that. Okay, so the entry was 23.69. The stop loss was 23.98. The final target was all the way down at 13.76, which is all the way down there. Just going to move this over a little bit so we see it. Let's do 144. We see it a little bit easier. So what was it? 23.69 to 23.98. Okay, there we go. So let's figure out our first target. So I put in my entry of 23.69. I put in my stop loss of 23.98. That's 29 ticks, so 29 cents. So if that's my risk, then that is also going to be my reward for my first target. So 23.4 becomes my first target. Risk of 50 bucks for me might be different for you, and we'll place that half of the trade. So 23.40 was our target one. Our target two, so let's place this again. So same entry, same stop loss, it will have remembered it, same risk parameters, and our profit target is 13.76. Yes. Now, just to show you here, so again, TradingView, does a lot of the work for us. This shows us that if price was to get all the way there, that would be a 34-to-1 reward to risk ratio, which would be amazing. Wouldn't it be amazing if we risked 1 to make 34 and that happened regularly? Unfortunately, or it's just not fortunate or unfortunate, it's just how statistics work. The further away your target, meaning the greater your reward to risk ratio, the less likely you are to get it. Which makes sense if you think about the lottery or raffles or business or whatever. The more money you want to make, the less likely you are to do it. The less money you want to make, the more likely you are to do it. It's just how life works, how statistics work. Now, we have our second target there for the case that price does hit our entry and just continue down and come all the way down to 13.76 and make us 34-to-1. Brilliant. But more than likely, somewhere in between, price changes its mind and we want to try and get out somewhere in a profitable area there. So there we go. That's the second half of that trade. So let's now place here. So placed 1st April 2022, 1 week and 144 minute. Now, interestingly, we usually place trades on a 3-hour chart, not because we want to, it just works out that way. But we've placed a couple today on the 144, which is interesting. Okay, moving on to look for new opportunities. So we've just looked at ELY. Let's look at DIN. There are 5 stocks left on our list. So again, on this one, We wouldn't place it. Why? Because we have a bunch of buyers very, very close, about to be hit. Those buyers are likely to push price upwards, which is not what we want if we're selling. We want price to go down if we're selling. This one, basically, current price is where the EMA is now, which means sellers are likely coming in right now. So we want to see if we have UFOs where price is right now, and we don't. So none there. CARR. So the EMA is at 46.39. So let's see if we find any UFOs around there. 144. Nope, no UFOs around 46.39. Bloomin' Brands, sounds like a fun one. 21.59. Let's have a look. Nope. So I believe we have one more to look at, two more to look at. And we'll see. 30.15 is our EMA price. We're looking for a UFO around there. Nope, nothing there. So last but not least, ABR, Arbor Realty Trust, 17.39. We do actually have an opportunity here on the 144. We're going to wait for it to load because, as we can see here, there's obviously no data there, so it's not fully loaded the data, which means this number is not accurate yet until it's finished loading. Okay, so we'll look on other time frames and we'll see if we have an opportunity. We do on the daily chart as well. We do not on the 2-day. We do on the 3-day, but the 1-day had greater probability. So there we go. We will look at the daily chart here. And again, following very objective rules. Did we have UFOs that coincided with the EMA number? And where we had multiple examples of that, which one did we choose? The one that had the greatest probability. That's it. It's based on stats and numbers and maths. Nothing subjective about it. Okay, so here we have two UFOs very close to each other. So as we can I think I'm still live. I think I'm still live. Here we go. Great. Okay, I think I'm still live. At least I hope I am. Apologies today, guys, for the technological issues. I'm currently in Malaga in Spain, and I have remote technology with me and dodgy internet. So apologies for the stopping and starting today, but I think I am still live. Hi there, Steve. I can see you on the chat. So hi. Hopefully helpful so far. So just to round off, finishing this trade that we have here, which is ABR. So with ABR, we will be going in at 17.24 and we will use the second UFO where our stop loss should be, which will be 17.77 plus 10 cents. So let's place that. Okay, so this will be the fourth and final trade of the day. So 1 week and 1 day in this case. We are going short 17.24 to 17.87. Our final target will be from all the way down here, 14.75, and we'll find our target 1 on our next platform that we'll look at, ABR. Okay. Okay, let's do this. So the price was 17.24 entry, 17.87 stop. Final target all the way down at 14.75. Down there. We're going to go in at 17.24 to 17.87, risk of $50. First target is going to be a 1-to-1 away, which is 16.61. There we go. And that goes in. Second half of the trade, same entry, same stop, same risk. It's just obviously gone to the closest rounded unit there, and that's 14.75. There we go. So let's then place here. So placed 1st of April 2022, 1 week, 1 day, just for our reference next time. Okay, so let me just come back, check our chat box, see if we've got any questions there. Again, I believe I'm still live. I believe I'm still streaming. We'll see at the end and see what ends up coming out. But if I am still streaming, just to round off, we've placed 4 new trades today, and we showed at the start of the video how we would manage our trades. Any questions, you can email me, which is becky@tradictive.com, or go to tradewithufos.com/Becky. Get yourself apps and platforms from here. Book one-on-one coaching if you'd like, or log in for free and ask a question in this sort of forum area. I wish you guys a great end to your trading week, great weekend ahead, and I'll see you soon. Take care. Bye-bye.